We are back with this video that we talked about that we're going to upload, and today we're taking a look at a Euro USD. This is a daily time frame. We're doing the Elliott waves, and the first thing that I talked about that each and every time when you approach the waves, you're going to start by looking at the actual trend, like which type of trend we are currently on. Like this one is a bearish market, as you can see, it's been falling from here and then we went upside, and now we are kind of like going down a little bit. And I want us to actually take a look at that, like maybe the depth of bearish market right over here. How long are we expecting this market to be falling, and you know those potential reversals prices that you're going to be taking a look at, like which price is going to hold the most and why, and all of that. So let's jump into counting our waves. So I said last time it will always depend on where you start at. So if you start at this price right here, let me put the horizontal line. If you start over here, so let me say just over here, right? Where is this line? Okay, and then we're going to close this with horizontal, with the vertical line. So let's put in like the vertical line over here, and then we go. So we all know now where we are starting. We're starting over here at this top over here, this price 1.15033. So from there we kept going downward until we made a bullish move over here. So I want us to understand why this price held into changing this bias over here to be bullish, and how you would have like expected if you like your mind was ahead and you saw this price over here is gonna hold, and then what type of a pattern you should have expected in this bullish trend right here. So right now we need to count our waves. So I'm gonna zoom in a little bit, and then we got something like this. So if you can see over here, we started with this impulse going downwards, and then a correction to the opposite direction, right? So this is great. So now we do have a correction over here, and we have our impulse. So these are the first thing that happened in this bearish market, right? So 1 2, right? So we do now have 1 and 2, and then we must know the rules, right? So I'm gonna put in a horizontal rectangle at this top over here, and then put it horizontal, right? So that we can see where over here it's 10. So remember that the top of 4 cannot touch the top of 1 over here. So this, in this case, this is like the bottom, and then it went up, and then it's made, if you're deciding to count this as 3, and then this is going to be 4, but 4 must not touch this price over here where 1 actually turned. You know what I'm saying? So we're going to this step, but this one did not touch, so we may count it in, but we're gonna see other reasons why we do not count it in. So as you can see, it's 10 at 50%. Over here it is 0.5, which is 50%, and then we made this bearish reversal again that we was expecting, but we expected this to turn a 38.2% over here because we are making wave 4. So we ignore this one, counting it as wave 4. So we're going to be starting over here at 0, up there, and then 1 2, and then we ignore this because this one, the turning point is at 50%, not 88.2%, so or 23%, but it went beyond all those 2 percentages. So 1 2 3 4 5, as you can see, and then we're going to be counting. We're going to be taking our Fibonacci retracement tool, and then put it where 3 tend. So it is over here, and then you need an APC in the opposite direction, which has supports like 38.2 final percentage, and then you can also take 23% because this is wave 4, but you can also take something that is beyond 23% but never touch a wave, I mean 38.2%. So This one is highly acceptable and everything seems so great for now. So our price is actually this one, and where we tend. So this is, but I don't need to put this line, right, so that I can minimize the mess on our charts. So we always keep it clean as much as we can. So right now, let me close this correction like this so that we can understand everything. So these are the most unique turning points that we wanted, like the highs and the lows. You know what I'm saying? Because we couldn't take this low as straight because this one went straight to 50%. So we're not taking it for now. There's sometimes where you take it and then when you try to adjust everything. So this was when is the time when those waves that you're talking about, these bearish waves finish, and then they finished at this price over here. So I'm gonna close it like this. As you can see, it finished at this price over here. So it is 0.9 something, 0.95505. So from there, you know what to expect because these are motive waves. These are the waves that we actually need to trade, which is 1, 2, 3, 4, 5, up until they complete the cycle at at 5, right? So if you did make your entries over here and then you made your last entries over here, but obviously you would have like taken this because you already know it's a bearish market. You have expected it somehow with some previous, you know, calculations of the wave because it never started over here. The graph is, you know, so you would have like understood that okay, we are entering a bearish market, but then when you apply those rules, you just put on like taking these unique prices over here, unique prices using the Fibonacci retracement tool. So now what you're expecting is an opposite structure in an APC from a finished cycle. Structure like this. Wait, what am I doing? So APC, right? Okay. So we got like over here. Wait, okay, we're going to be, so you need a structure that is like this A B C, right? And you did have it because this is this one. So we're going to be putting in, you know, on top of the graph so that we can depict this APC structure. As you can see, it's an APC structure, but you can see what happened over here at the beginning. So it was like 1, 2, 3, 4, 5. See, these are mono waves. We call them mono waves, building up a certain pattern that you want, but that pattern gonna adjust itself and be clearly visible. As you can see, you can just ignore this action over here and then go like APC because that is what you're actually waiting for after a finished cycle over here. So even if it is 1, 2, 3, 4, 5, you expect it to even 10 on some certain prices. You know what I'm saying? So from here, and then you're like, okay, I'm expecting an APC pattern, but then you take you go ahead because you always go ahead. So let's say you find the market over here. Okay, we finish this cycle, and then now what you need is an APC between in the opposite direction. But now you're gonna go ahead and look for those prices that are highly, you know, that you can recommend when you're thinking of a bearish market. So when you like, you know, analyzing, and then you say this price might hold and this one might hold as well. As you can see, it's like ranging from the same prices over here, but over here it's like went beyond it. But we are taking the Fibonacci retracement tool for that so that we can go ahead. So you're taking like the entire cycling. So it started at 0, 1, 2, 3, 4, 5 up to 5, right? Because now a finished cycle, they tend to be mono wave after they finish the entire cycle, and then they be like mono waves. Then you need something like, because you know two will always like 10 and 50% or 60% or beyond that, because those are acceptable percentages Elliot talked about. If it turns at 38.2%, and then you're not counting it in because it's never went far enough to be counted as three. I mean two. So you're taking like these percentages over here. So as you can see, if it's not, because using a Fibonacci alone, this is the 60% is regarded as the golden ratio. So usually, in many times it's it's 60%, but as you can see, it went beyond that, and then you're like, okay. But this is what I was trying to say. When you come across a market and it is at this point right here, and then you go ahead in the future and you'll be like, okay, I'm gonna firstly count in. Okay, let's remove 50% for now, but because usually we be turning it 60% or even beyond that. But there are some cases after these waves, after they finish, sometimes that you're going to be playing with 50% a lot, depending on the degree of the correction that you have, because also time matters. Because if you waste a lot of time trying to complete extra cycling, maybe this correction is going to be in a short period of time. But if this, as you can see, we're just like following smooth, these corrections are not in bigger degree. They never wasted like a lot of time. So we are expecting a correction to waste so much time. As you can see how huge it is in terms of a degree. So there will always be those vice versa in terms of time and prices if you analyze, even including this what I'm talking about. So these are your percentage 50%. Okay, we remove this one because now you can see it went beyond it. So we're only left with 78%, the percentage that you are looking for as well, because it's actually a percentage that really holds some prices. And then once you combine it with some other type of analysis, we can take this out of, as you can see, this candle over here, it's somehow this is the last bullish candle until we had this fall. So we're going to be taking it, counting it in over here. So you can see that we actually, the price uh, the price is the one that's held so much over here. As you can see, after we reached it, we touched maybe like 3 times, but using the spikes. So there was a huge selling pressure over there. So now you understand that, okay, this is the bearish market. All along you've been expecting it, and then here's your APC correction in the opposite direction. And then because it was these motive waves were so quick into finishing the cycle, then you expect the correction to take too much time, as you can see. And if you want to use this time thing, there is a fib time zone over here you can. But I know I I used it so much back then, but now you kind of like know things, so there is no way to rush the tool and then put it over here, because sometimes it get messy. As you can see, let me just put it from where it started up until where we finish. As you can see, these are the vertical lines it takes out. It separates the prices. So once you get closer to, so it is enough time when you get closer to this vertical line according to the fib time zone. You know what I'm saying? So once you get closer to this line, vertical lines, and then you realize, okay, we might have a huge selling pressure if you want the graph to go. But if it is going up like this, so closer to these lines, we're going to see a reversal in the opposite direction. So let's go. Now you see how we use the Fibonacci time zone, right? So what else? So now maybe you can just close this like this. You now have your APC pattern right here, separated, very smooth and nice. So what you want now is the market to continuously keep falling, because after you finish all this, so these waves are just like this 1 2 3 4 5 are just like one over here, and then now you have your one. So let me put this one over here. I'm not gonna put it. I'm gonna write it. And this is kind of like slow. I don't know what's happening because it should be. Yes, here we go. Uh, okay. I think it's low. I think it's low. But you know what I'm saying? This is what you always be looking for: the time, the degree of the corrections, and everything. When you trade, you must put in like in mind that you got time and in price, as this is like Cartesian plane. These are the y-axis and the x-axis in this. So down here it is time and everything. So it matters. So when you're doing the wave to put in some analysis using time. It's really that matters because you're gonna be able to filter out the corrections and then know how much it's gonna take that correction to actually give you what you need. So right now you are just falling like this, and then remember, you need mono waves to continuously go lower and lower. You need just mono waves. So if this is your first impulse, you want to see your second impulse. This is what I always emphasize, that you wait for something, something like this, an APC structure in the opposite direction, and then from there you go to continuously fall, and then you need your APC in the opposite direction, and then you continuously complete this cycling of the mono waves, and then you wanna have another correction in the opposite direction. Maybe it's gonna be turning over here, but you don't you must always put in like the bigger picture is this part over here, which is always driving this price over here, because right now we're entering a new phase right now. So as you have separated this, and then you need some motive waves, because the corrective waves are over here. So you need like 1, 2, 3, 4, 5, continuously falling up until you break this down over here. You go even lower because wave 3 is the longest wave. Now it is 2 over here, so you're making wave 3, which will be built by these mono waves of 1, 2, 3, 4, 5, and then in the opposite direction, and then continuously going lower and lower. But for now, I think we are done. We're going to see each other in the next video. If you are new to the channel, please hit the like and subscribe button. We're going to be meeting in the next video. Thank you.